This is my financial disclaimer so I don't get sued.
Good morning, good evening, good whatever time it is you're listening to this. I hope you're having a good one. Let's take a look at what we're covering in today's video. In this video, I'll be going over the datasets, the earnings, and doing a technical analysis over the SPY, and perhaps taking a look over possibly treasuries, semiconductors, maybe some other stuff, maybe not. We'll see how long it is on the video. Um, with that said, this is for the week of February 16th, 2026. And with that said, let's go ahead and jump straight into the data. Now, we have a fairly busy week this week with the data sets. However, Monday is closed. That is President's Day, so the market will be closed. Futures are still open, so go ahead and trade those or look at those. For Tuesday, we don't have a whole lot of data, mainly that 8, 15, and 8:30 time slot, which is the ADP weekly data set and the New York State Manufacturing Index. Really not anticipating a whole lot out of those data sets. The weekly ADP change has been very poor over the last, few months now. So I'm really not expecting any increase in, you know, the employment for the most part. We've been seeing cooling throughout the labor market for quite a while now, and I don't really see that changing direction just yet. Now, for Wednesday, that's when we start getting a little bit more busy. 8:30 a.m. we have the durable goods orders and the housing starts. Really not interested in either of those. I don't think either of those are going to move the market too much. We do see that the forecast is expecting less orders, which kind of, goes in with the whole thesis we've been talking about for, months and months and months now that the orders have been coming in not just low, but negative across the board. And the forecast is showing that they're expecting again another negative in the orders. So that's that. 9:15 a.m. we have the industrial production data. Not really anticipating a whole lot out of that. I forgot to say we do have the housing starts at 8:30 a.m. I'm not really anticipating the housing starts to move the market too much unless we see some sort of signal that's showing that the housing market is absolutely, about to fail. But we don't see that, you know, at all yet. At 11 a.m., we have the Atlanta Fed GDP now, and that was at 5.4%. I want to say about a month and a half ago. And we had that week where we did have a bank fail and it pulled down, I want to say to 4.5%. And then since then, it's just been declining. So it's an interesting data set, but it generally does not move the market too much. At 1 p.m., we have the 20-year bond auction. Now, we did see the 30-year Treasury note, pull back quite a bit in terms of the yield. So that's good. Very likely we will see the same out of this 20-year bond auction. There's really no data prior to this that's going to um, shift the long end perspective too much. Now, we do have the FOMC meeting minutes at 2 p.m., and we also have Fed member Bowman speaking at 1 p.m. that day. Probably should have done that in the reverse order, but it is what it is. Um, Not too worried about what Bowman has to say. Not too worried about these meeting minutes. Going over the last, you know, I want to say 3, 4 Fed, discussions and going over the meeting minutes and everything for those Fed meetups in terms of any dissenters or anything like that. So really not too worried about these meeting minutes. I don't think they're going to move the market very much at all. Now for Thursday at 8:30 a.m. and this is, starting to pick up in terms of the data sets, but really it's Friday. But 8:30 a.m. we have the jobless claims, we have the imports and exports, we have Fed's Bowman speaking again, and we have the Philadelphia Fed Manufacturing Index. So a lot of different data sets. Really not a whole lot that's going to shift the market too much unless we see something major with the jobless claims. Now we have been seeing the continuing jobless claims starting to pick back up again. Have been seeing the initial jobless claims, starting to pick up pretty aggressively again. So those are two data sets to really be paying attention to. The initial jobless claims, the forecast is actually expecting an increase this week overall. So there's already an expectation of dovish data for that time slot. The import data, again, has been adding to the GDP. So with that, we've been seeing imports decreasing, which adds to the overall, how much funds are in the imports overall, and that adds to the GDP rather than um, is removed from it. So it's one of those data sets that is really important, and the tariffs have really kind of hampered our imports quite a bit. And because of that, that's really driven up the GDP, especially the quarter over quarter GDP. That's been driving that up massively. And with the imports continuing to decline, that's only going to continue, inflating that GDP number, even though in reality it's not doing anything. It's not really adding to the GDP. It's just in terms of how the GDP is calculated, that's added rather than subtracted. So, um, yeah, at 9 a.m. we have Fed's Kashkari speaking. Now, generally, Kashkaris can be fairly hawkish overall, but um, you know, he's one of the Fed members that definitely can move the markets. Um, compared to just Powell speaking. Now at 10 a.m. we have the Atlanta Fed GDP now, and we have the pending home sales. Don't really expect too much market movement out of that. And then at 1 p.m. we have the 30-year tips auction, which don't really expect too much market or, market price action out of that either, but that will be important for telling us overall if the treasury market is expecting inflation to increase or decrease, basically. Now, scrolling down, Friday's the really big day. As you can see, there's quite a bit going on Friday. So Friday we have multiple different PCEs. We have the core PCE and the, standard PCE. PCE is the personal consumption expenditure. So very, very important data sets. We also have the GDP quarter over quarter, the GDP price index, personal spending, all of that's at 8:30. So really out of anything this week, it's this 8:30 time slot on Friday. That's really going to move the market quite a bit. Now at 9:45 a.m., so 15 minutes after open, we have Fed member Bostic speaking. I don't really anticipate Bostic to move the market too much. At 9:45 as well, we also have the S&P PMI data coming out. So that's the manufacturing, the composite, the services. Again, they're expecting so far, it looks like neutral with the services, but the manufacturing PMI, they're expecting a pullback in that. PCE data overall, they're expecting that to come in some of it neutral, but overall, just a little elevated. But the GDP, surprisingly, they're expecting it to come in quite a bit cooler, especially the quarter over quarter GDP from a 4.4%, they're expecting down to a 2.8%. Again, that can, pull upward quite a bit due to those imports. So a lot of data coming out at that time, and at the 9:45 time slot, there is a lot of data as well. And at 10 a.m., we have all the Michigan inflation and consumer data. So that's again ton of important data. So really, all the morning and on Friday is going to be super, super, super important. And then after that, we don't really have any data for the rest of the day. So, um, really, I'm not really worried about any of the data this week other than Friday morning. Friday morning is really where we get a lot of that very, very crucial data that actually tells us what's going on with, not just the market, but the economy. So those are the data sets I'm looking forward to. Now, something about last week is that the CPI did come in quite a bit cooler, and it was a little weird to see that, especially when we had a lot of hawkish data coming out on that prior Wednesday, where we had the payroll numbers coming in very, very elevated. So, seeing the CPI pull down quite a bit was, out of the expectations of probably the majority of the market. I know the forecast for the CPI was expecting it to come in higher, so um, yeah, I didn't expect it to pull down as much either. I expected it to come in cooler, but not as cool as it did. So that's the data. Let's go ahead and jump to the earnings. Now, for the earnings this week, we don't really have a whole ton. As you can see, there's really nothing I'm super interested in here. There's Oxy, there's Carvana, um, nothing really too interesting. And the main reason why I'm even showing the earnings is because not this week, but the week after this week, we have Nvidia. That's when we start having a lot of these major tech earnings again, and of course, Nvidia being the front runner of them all. Um, Obviously, that week's going to be very, very crucial. So this week, not so important. Really, not much going on here. Um, with Palo Alto after the close on Tuesday, but they're not going to move the market too much. Doesn't really matter what they do. Now, one thing I did want to show was the Fed Watch. Last week it did pull down all the way to the 4%, and this is for the FOMC on March 18th. So again, there's no FOMC in February, but for March 18th, the odds of a 25 basis point rate cut did pull down all the way to 4%. Now has come back up towards that 9.8%, but that is a very, very drastic change again from the almost 20% where it was the week prior. So this is shifting quite a bit, and I do expect Friday's data especially to shift this back upward, quite a bit. But for current expectation is that we don't have enough dovish data, cool data to really be telling the market that yes, we need an additional cut. Now, if we start seeing continued labor market data weakness, then absolutely this is going to pick up very, very quickly. So, um, nothing too crazy here yet. If we do see a data set that is very absurd, like last week's payroll numbers, then, the Fed Watch CME will pick it up very quickly. This will shift up or down in, in correlation of whatever data set was released. So this is always good to look at. I always like to start my weeks, out by looking at the CME Fed Watch because it does kind of give me a standing of where the market is overall for the week. Are we feeling fairly hawkish or more dovish? Now, the market isn't exactly in a hawkish stance right now, but with this next rate cut, currently they're in the hawkish stance. If we start getting data that's going to promote this rate cut very heavily, that's going to be very bullish for the market, very likely. So that's something I try to look for.
If you're enjoying this, please check out my Patreon. For just $1 a month, you can join our community chat and access our tools like the Unusual Whale Spot and our own personal GEX and DEX market positioning. My $12.99 premium tier gives access to my personal trades, 2 live classes a week, which are on Wednesdays and Sundays, and direct support from myself. The links to join are below, but you can also join through patreon.com/wooksy. Thank you for supporting me to help you build skills for a lifetime.
And getting into the technical analysis, as always, let's ensure our daily time frame is turned on and that we have the moving averages and the Bollinger Bands turned on as well. Now, last week, again, I keep talking about this upper Bollinger, and let's just kind of preface the technical analysis part. We keep getting very, very close to having these upper Bollinger breakouts. And it's not that we are very close to the range, it's that we also have very bullish structure on top of it. So we get very close to these upper Bollinger ranges, and then we just start jumping off. Each time we've done that for the last 3 times now, almost 4 times, but wasn't exactly close enough. But the last 3 times now, got very close to the upper Bollinger, had a rejection, dumped down to the 20 mon, came back up to the upper Bollinger, had a rejection, down to the 20 mon, came back up again, wasn't enough, rejected down to the lower Bollinger, back up again, almost to the upper Bollinger, rejected back downward, pulled back up, started to look like we might start heading back up to the upper Bollinger again, but we did, expect some further testing of supports in here. However, that was another rejection. So we're starting to see a ton of rejections in this bullish upside, and we're actually going to mark this out. That cup does not belong there. It's this range right here. Okay, now mark this out right there. And we're going to make this a light blue. So anytime we start getting into this light blue range, it becomes a selling range. Okay. Um, this has made our major buying channel have to extend multiple times now, which is actually telling me that very, very likely we're not extending the buying channel just yet. We're in an extremely strong consolidation channel, and it's still a little too soon to determine if this is going to be a selling channel to the downside, and I'm just going to mark some random points here to just kind of highlight that. Um, is this going to be a selling channel to the downside, or is this truly, going to pull back up and then we're going to see that 700 plus range? Little too soon to decide yet. But we are going to go over some signals that I think can help. So we had that moving average collapse, and I've talked about that certain move multiple times where the 10 mon, 20 mon are almost right on top of each other. And because of that, if we have the 5 mon pull above very heavily, above the market price or below the market price, it can cause the 5 mon to pull above or below those moving averages very quickly, which that allows this to turn from bullish to bearish very quickly. One of the main signals to look for a major trend change is when the 5 mile is crossing below the 10 mile and when the 5 mile is crossing below the 20 mile. Okay, that's usually one of the major signals of a downward trend change. Okay. However, we've been getting that multiple times. We've had it here, we've had it cross back upward, we've had it cross back upward where we start seeing the 10 mile pulling back upward again, and then all of a sudden it collapses. The moving averages turn from potentially very bullish to very bearish again, starting to pull back up and collapsing again. So, in reality, I'm seeing this becoming weaker. I know that I have been bullish over the last few weeks, and it's still hard to not be bullish as we have been seeing again a lot of bullish structure. Still have this major cup formed. However, this might just be forming new structure um from that cups breakout. Basically, it'd be right in this area. Sorry for all the drawings, but we had the cup already do its move. Essentially, we had the cup form the handle, and from that, we just have entered a massive, massive, massive consolidation range. Okay. Now, this is a very tricky range, and these are always probably one of the hardest ranges to trade, even though there's massive trades to be had within the ranges. Um, it's very tricky because again, it looks like it could be turning into a bearish trend, and then all of a sudden it turns into a bullish trend. And then all of a sudden it's a bearish trend, and then it's a bullish trend. So this is very, very tricky. Now, here's a few things we do know. The 5 mAh is going to be trading once again below the 10 mAh and the 20 mAh come Tuesday. We also have the 10 mAh is trading below the 20 mAh and going to continue pushing downward Tuesday. So even if we see buying, starting Tuesday, Wednesday, the moving averages are pushing downward. Okay. The 5 mile I have it marked at the 685.60, somewhere around that range. It could be, potentially lower, could be potentially higher. Just make sure you mark that level. I want to take a look at the weekly time frame because we're just seeing so much consolidation within the daily time frame that this is starting to tell me that potentially we're going to start seeing a weekly 20 mile test. Now, generally 20 mod tests, and I'm not talking just the price testing the level, I'm talking the actual 5 mod pulling down to that level. Now, we haven't had that happen since the actual sell-off in 2025. So, again, things can get very bearish from here if that's truly what's going to occur. Looking at the ADL on the weekly, we do see it pulling downward. On the daily time frame, we see it pulling downward very, very aggressively. So there's a lot of mixed signals in here. Now, one thing that I do want to say that is bullish is that we did reject the lower Bollinger, not just once but twice. So generally lower Bollinger rejections turn into bias to the upside. However, they can also turn into these ranges where, go ahead and put it up, right before these massive sell-offs where it looks like we're starting to potentially reject that bottom Bollinger, potentially can start seeing things pull back upward, and then all of a sudden it's just, off to the races to the downside. We've just been seeing far too much selling in here. Yes, I don't really think that the selling has gone anywhere. Again, it's been holding this very, very tight consolidation range. However, we have been seeing a lot of selling in here, and it's very, very concerning. Um, with that selling, and there's a level that I'm looking at very specifically here, is that if we're looking to have a test of the weekly 20 mile, that basically pulls the 5 mile below the 678 range. Well, with that price action, that would close this gap with the horizontal ray right there, and we're going to make it big red line. Bollingers, turning off the moving averages. So this is, alluding to that potentially we could be heading downward. Um, if we're going to be pushing downward into that weekly 20 mile level, then that's the range it's going to start pushing towards. If that happens, then this creates a very large inverse cup to the downside with all these selling candles to the downside, with all these failed cups. This is starting to look very, very plausible that this can turn into an inverse, cup and handle. Now, the handle, I'm not so set on because generally inverse handles tend to break out to the upside and turn bullish. However, again, the true expectation should be that we're going to push all the way down towards the bottom of this consolidation channel and potentially even break below that. Okay. Now, that's the bearish thesis overall. Going over the bullish thesis. The bullish thesis is that a lot of this selling has been purposely selling into buyers. And we've been seeing a lot of that, and I'm going to show why we've been seeing a lot of that in a moment here. But the thesis is that the Bank of Japan has been trying to unwind positions, and they are purposely selling a lot of these equities at the high into, basically very ravenous buyers. Each time we get the dip, we see it bought back up, sold, bought back up, sold. We also see this within the USD JPY. You start seeing these big candles, but that's the selling, buying. Or I caught that a little bit mixed up, but this is the buying, selling. And we also see that within the dollar. Here, pull this up. Almost the same pattern going on with the dollar, and inversely, we see the same thing happening with the yen. And very likely, it's the Bank of Japan starting to unwind positions. So, another signal that I want to look at is the credit markets. Is that liquid? This is the investment grade corporate bond ETF. Saw, very, very large buying. We see the ADL just continuing to pick upward. We see this within the HIG as well. If I could pull it up because I am blind. You see this within the HIG as well. You do see a little bit of a downside within the ADL, but that's just a little bit of chop. The HIG is going to see the selling a little bit more compared to liquid because this is the high yield corporate bonds compared to investment grade corporate bonds. So in all technicals, this is kind of, the quote unquote junk bonds compared to, the really, really super strong fortress bonds. So, um, you will see any form of equity shaking in terms of, people wanting to sell off and whatnot. Very likely within the HIG prior to the, you know, prior to liquid. Um, Bitcoin has been bearish, but it has been buying, some of this support back over the daily time frame. It's been taking quite a while to retest this 5 mile, but with this 5 mile retest, if it can hold this range, then it is still looking to head upward towards that 20 mile. So that does look good. Um, the main reason why I'm bringing some of this stuff up is that we haven't been seeing a lot of signals that we're going to be seeing this massive selling that, potentially is being alluded to here. Um, Generally you see the HIG selling off. Generally you see, some of the credit markets selling off. One of the big signals that does tell me that potentially this can be happening is that we're seeing TLT buying up very, very heavily. Um, this is, of course, the bottom Bollinger move I talked about where I said generally, TLT sees a lot of buying with the bottom Bollinger moves. It was very strange that this one didn't, and I said it would be very strange if this one didn't as well, as very likely it would start breaking that buying channel, but we did see the buying within that, but very likely, again, that's the Bank of Japan buying, which does reflect a lot of what happened within the last two major unwinds. So there was the unwind in the end of 2024 during, the end of July, early August, and that lasted about a month and a half, 2 months. And then there was the unwind of early 2025, which that was a lot of the Bank of Japan selling positions as well. And that lasted almost a whole 4 months. The true selling of it lasted about 3.5 months. So this can go on for quite a bit. If this is the top of the current market, then the signals are starting to be a little more present than they were a few weeks ago. A few weeks ago, we were seeing that potentially they were rejecting these lower ranges of liquidity and wanting to create, basically fill gaps towards the upside for that liquidity, um, to push higher highs. We saw we did see, higher highs pushed in this major consolidation area, which was also very confusing. However, we do have to remember that these prior major unwinds as well, which was back right here and right here. Again, those were the top of the market at the time. I mean, that was all-time high. That was all-time high. This is again all-time high. So potentially we're due for some blood. Um, if the market is really going to be heading there. It's hard to see that when we're still seeing a lot of strength within some of the prior structures and everything else, but with this major, excuse me, let me just back up a second. With this major cup that was building out, and we really were anticipating to push all the way back up, basically push that 700 range. With that rejection, with a head and shoulders right here on the day, this is telling us that very, very, very likely we're going to head all the way down towards that 670 range. Okay, which would be the bottom of that consolidation channel. If we get to the bottom of that consolidation channel again, and I do want to turn off the Bollingers, it can create a range for a massive bounce to the upside. So be aware of that. We will monitor it. This is something that we will track in morning streams, but this is kind of, the downside to that is that potentially be filling out a major inverse cup here towards that 670 range. So selling, we're not out of the woods yet. Potentially we're even further in the woods now, and potentially we could be seeing within the next few sessions a whole $10 to $12 downside. That would coincide with the lower Bollinger. Lower Bollinger is currently, pull up the Bollingers on the daily time frame. Lower Bollinger is currently at 677.74. So with the 20 mile pulling downward, with the 10 mile pulling downward, we will see the lower Bollinger open up towards the downside. We talked about how this major consolidation range, as the Bollingers tighten up, it leads to these major moves where it can be a push to the upside or push to the downside to expand the Bollingers. So far, we're seeing that expansion towards the downside. So truly, the expectation should be very, very likely going to be pushing towards that 670 range. Unless we see major bullish signals. Again, we want to see Bitcoin being bullish. We um, want to see, sorry, I gotta look at something. We want to see HIG continuing to be bullish, meaning we want to see the ADL picking up. We want to see the price pulling up above that 81. We want to continue seeing liquid being bullish. Likely we want to see LMT being bearish because again, LMT is a defensive. If money is going into defensives, very likely is exiting from more risk adverse equities, which would be tech, semiconductors, things like that. Within semiconductors, potentially we could be seeing more downside, but we do have this very, very strong cup and handle here. We do have the ADL increasing even with the selling occurring on the day or on Friday. We had the ADL increasing very heavily, but we do have this potential head and shoulders here, so we're not out of the woods yet. If this pulls back upward, forms a cup, forms a handle, then we could start looking, more bullish, and that's why it's really hard to make a technical analysis right now, being overly bearish or overly bullish because there's a good thesis for both sides here. Again, with us being pushed into the lower Bollinger here on QQQ, potentially we could be seeing some major upside, but we're seeing this inverse cup closing to the 594, so very likely we see that close out. If that closes out, that is alluding to this 580 range, so again, a lot of room to be cautious here. But if you're looking for long calls, you do look for the lower Bollinger push into that day two lower Bollinger. So that is always when you buy your calls to the upside. We'll talk more about the SPY in tomorrow night. Um, there's a lot more to go over in technicals here. But again, what I'm really looking at is that we do have this head and shoulders on the hourly time frame throughout the majority of tech. If this closes, if this finishes out, then that's going to push us downward quite a bit. Okay. If this doesn't, then, obviously the upside would be finishing the structure to the, towards that upside, heading back towards that 686 range, finishing that miniature cup out, forming a handle, then closing this larger cup back up to that 695. Okay. Um, but yeah, seasonally, we're not in a bullish stance. Looking at the daily and weekly, things are starting to look pretty grim here. So it's starting to become time to get pretty bearish. Um, but yeah, again, I'm sorry tonight's video wasn't the best, but I've just been extremely busy this weekend, extremely tired, and I'll go over it a little more in tomorrow's video. But with that said, going to end the video here. Um, yeah, I don't really have much more to say about that. I think that from all aspects, we're seeing a lot of reasons to be bullish for the market because potentially we can have a very large bounce out of a lot of this selling. Um, if we see the Bank of Japan really just stop their selling, if we see the buying pick back up, then obviously markets can jump right back up towards that 700 range very quickly. But if we see the markets continue the same direction they're going, if we continue seeing the yen strengthen, then very likely that's suggesting that the Bank of Japan is not done unwinding. And if they're not done unwinding, then the selling within equities is not done yet. So, um, for the upside on the SPY, what I would be looking for is a 5 mile test. If we're not going to push into that lower Bollinger, then it will be the push into the 5 mile. From the 5 mile, either we will have another rejection to the downside to push into that lower Bollinger, or we will see the 5 mile slowly once again climb back up over the 10 mile and the 20 mile. So yeah, Tuesday's trading session, not super set on what we have in store in terms of bullishness and bearishness, but we will go over it. With that said, I'm going to end tonight's video here. So thank you for watching my rambling. I will be streaming at 8 p.m. or 8 a.m. On Tuesday morning. So if you're interested in that, I look forward to having you join me there. Other than that, thank you for watching, and I will talk to you in the next one. Take care, everybody.